following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. To make it a great night and a great week, folks. We're going to have a big volatile week out here this week. You are only responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of the relationship. It's not up to you to control the other half. Respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We have the Dow Industrials down 110, NASDAQ down 9, S&P's down 9, gold contract down $6.70, traded at $1,324 an ounce. Silver off 5 cents, $19.63 an ounce. Platinum up $2 at $1,084 an ounce. Copper down a penny at $2.22 a pound. Light sweet crude down $1.09, trading at $43.10 a barrel. Bonds, 10-year note down 3 ticks, 132.01. 30-year bond off 4 ticks, 171.16. King dollar down 191 ticks, trading at 97.32. The yen is at $100.09, and the euro is at $1.09, the yen is at $1.05. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we have the SPY in a ABC structure on the way up. We've been in the same place now for 8 trading days, meaning at the 216 to 217 level. The price projection for the SPY of this 1-to-1 ABC structure on the way up is 218.90, and I expect we're going to see that made somehow, some way. That's inside the SPY. We go into the Qs, the NDX 100. What do you have with the NDX 100? NDX 100 right now is trading at 113.44. You're down 21 cents. You got light volume. The Qs are in an ABC structure on the way up to 121.99. Now, that is a lot more, that is much harder to conceive how we're going to get up to that level. But that's the price projection. On the 18th, we took out the B point. We took it out with volume. NASDAQ Composite, we're at 5,090. That ABC structure on the way up is 54.69. Same type of setup. It's like, really? You're really going to make it up that level? Hey, we'll find out. We're going to get into that a little bit more. The reason that seems so high is that what we have is this, folks, is that you have the 2-day Fed meeting start tomorrow. There'll be a statement out on Wednesday at 2 o'clock, no press conference. Then what we also have is this, is that Tuesday after the close tomorrow night, we have Apple come out with numbers. After the close on Wednesday, we have Facebook come out with numbers. After the close on Thursday, we have Google as well as Amazon come out with numbers. When I look at all of those, it seems to me that where the Fed goes is going to be the most important. So we'll see where it shakes out. Gold contract. What do we have with gold? Gold contract out here down $6. We're trading $1,317. What we've done out here on this contract, we're rolling over contract right now. That's what we're doing. This is pushing into the swing low of 1310. We hit 1311, and it's pushing in there with some volume. What I expect you're going to see is that gold's going to make its way back into this 1280 area. If we go and we take a look at the December contract, and that's the contract that we're coming into, and you'll see by the end of this week that December is going to have the volume in it. Right now, the December has 126,000 contracts. The GCQ. Yeah, the August has 245,000 contracts. So if we go over and we take a look at the December contract in gold, that's trading at 1324. That also is coming into the lows and coming into them with big numbers. So this December contract, I figure we're going to get down to about 1282. We go take a look at the silver contract. What we have with silver is this. Silver right now, come down 5 cents today. You have 42,000 contracts. This is building cause to try to break the 1928 area. Silver is highly volatile, no doubt. We'll see if, in fact, it can break that area. What I expect we're going to see here, it's going to be the Wednesday statement from the Fed. That's the bottom line. That's how I think this whole thing is shaking out right now. We go take a look at the 10-year note. What we have with the 10-year note is this. 10-year note trading flat out here today. You're down 3 ticks. You are at 132.01. And this little baby here is also a building cause to get back to where it broke topside from on the 24th of June, which is 130.21. The 30-year, it looks to me like it's the same type of setup inside the 30-year. 30-year right now actually looks like it's doing a setting up in a small ABC down. Yeah, okay, so the 30-year, we're trading at 171.15. That breakout area, when it broke topside, is 165.25, and it looks like it's setting up to go after that level. King Dollar. What do we go with King Dollar? What King Dollar has is this, folks. King Dollar is trading at 97.31. King Dollar last week took out the high of 96.70, which was the June 24th high. It looks to me like King Dollar was making its way up to the downdraft that had been created out here on February 3rd. The high of that downdraft is 98.91. And what is game here? It looks to me like what is game is that you could actually get up into not only the 99 area, but maybe 100. And what's that all going to be all about? That's all going to be more than likely about the Fed statement on Wednesday. It looks that they still will announce that they plan on going up on rates before the end of the year. Now, my take is that the statement will say that, which will do some damage inside the commodity market and very well could do some damage inside the S&Ps. That being said, I don't see them going up. Why? Because these world rates are so low, and I suspect the volatility that we're going to see in the next 3 or 4 months, it's going to be the Fed calling wolf once again. So if we take a look at the probability of rate hikes using the Fed Fund futures rate, this is what you have. There's a 10% chance of it will be raised Wednesday. There's a 26% chance that on the September 21st level it will be raised. 29% on November 2nd. December 14th, that's the one that I suspect inside the inside the statement is that they will plan on raising. Right now, that's 47.5%. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 110. NASDAQ off 10. S&P's down 9. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 110. We get the NASDAQ off 11. S&Ps are off 9.5. And as we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. Now, don't forget, folks, Steve has an outstanding show right here at TFNN every trading day, 1 to 2 Eastern Standard Time. At TFNN, we broadcast live content Monday, Wednesday, and Friday. We start at 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. All of that live programming, folks, you get right on your cell phone, TFNN.com. Hit Tiger TV. You're going to get some great HD quality video as well as audio. Now, Steve has a great newsletter. It's called Mastering Probability. You can test drive this 30 days right now, right here. Go to TFNN, go to newsletters, go to trading newsletters, can test drive Mastering Probability 30 days absolutely free. Steve Rhodes, what's going on?
Well, I guess I should have left my winter jacket behind for you. I see it's cold in the office.
You know, folks, if you're watching Tiger TV, I know, I got to bring some new jackets in. What happens is this. Our office gets to be like 55 or 60 degrees, and we have heaters. Some of the folks have heaters under their desk. It's so bizarre, man. And you want to hear what's really bizarre, folks? So it's a Class A building. The guy that owns it is literally one of the richest guys in probably the United States. But the ironic part about this, do you know what he does, Steve? You know how he made all his money?
How's that?
He's still the largest owner, private owner, of corn in the country. Corn. Like,
oh, okay,
yeah.
okay. Hey,
So
people got to eat.
He's a grain guy. Come down to Florida years ago, I guess, and bought every mobile park there is. And it's just really wild, man, because he pays for the air conditioning. So whatever it is, he's doing something right. So it's like, okay. Crazy, though. I know. So I got a jacket on, folks, because it is freezing in here.
I love it. I miss those days.
Oh,
hey,
man.
I wanted to talk to viewers, listeners about a couple of different things. One, I wanted to take a look at seasonal patterns.
Okay.
I want to take a look at a consolidation breakout for us to consider and take a look at. Last week, we talked a little bit about price oscillation. calculator, so I want to be able to show those to you as well. So let's start with the seasonal patterns of the Dow. And as you know, I track this information and to use this as a guideline as to what the Dow typically does, either on an annual basis or in this year, because we've got that presidential cycle, and specifically the 8th year of a president. It gives us some clues as to what the market wants to do. So the interesting thing is that inside the Dow, the very top portion of my chart, the one-year seasonal cycle would say that the Dow would actually top, and specifically with regard to this trading year, on the 20th of July. Now, interestingly enough, the actual high thus far inside the Dow is July 20th.
Oh, that's
the
wild.
market has the market has begun to pull back from there.
Okay.
Now, there's another, the bottom portion of my screen takes a look at those presidents where we have had two-term presidents. And it also takes a look at what the average price direction movement is. It called for a top today, either today or Friday. So they're both show. Now, the difference, though, is the annual seasonal cycle pattern, which is the top portion of my screen, says that the top on the 20th is the one that lasts all the way into the fall. And in a normal market, but we've got, the question is which one is going to be the influencing factor. In the presidential cycle, it says we have a little bit of a hiccup between Friday, today, and through the end of the month, right, as we come into window dressing. So it's going to be interesting for a couple of reasons. One, your comments about the Fed. And what they may do, what they might say to the marketplace, as well as you've got these A to B equals CD patterns that you're looking for to be to at least complete at a minimum. It might be even more than a one-to-one, so we'll see what happens there. But these are the seasonal type influencing patterns that exist inside the market. That then takes me into the consolidation pattern of the Dow. And I'm just sticking with the Dow right now for our listeners. And here's what you and I know about the Dow. We know that the lows out here that were formed back in August of 2015 have been tested twice. Not exactly to the tick, but they have been tested twice out here. So we know we've got a consolidation-oriented bottom that's in place. We know that the highs in the Dow from May of 2015 have now been broken. So the first test on that, we take a look at that seasonal pattern and we see the market pulling back. Our first real test, it wouldn't surprise me to see over the course of the next couple of days, maybe going into the Fed minutes on Wednesday, to see the Dow actually pull back to 18,351, which I believe is the exact top from May the 19th or May the 19th. Now, if the Dow is able to hold that consolidation level, gets tested, moves back above it, the actual consolidation pattern, I know it's going to blow your mind, it's going to blow probably everybody else's mind, but 2,850 points, give or take out there. So the Dow, it's going to be a really big piece of information. If the Dow is going to continue to track along the annual seasonal pattern, which says the 20th was a high out here, we'll see the Dow get back into this consolidation pattern, and we'll see the Dow move lower. Who knows where? Maybe at first, the first target's always going to be the most recent swing point, so that's June 27th point, and we'll see the Dow continue to move lower into the October-ish time frame. However, and I'll put that seasonal pattern back on here because maybe people didn't actually catch this, if we're more into the second term, the last year of a second-term president, the market puts in a bottom sometime around the end of this week here, July 31st or so, and moves higher into September. Now, I'm not saying it's going to go ahead and complete that consolidation pattern. Maybe it does, maybe it doesn't. But the longer that it stays above that range out there, the more likely that is to come to fruition. So that's what I'm looking at when it comes to the Dow. Now, interestingly enough today, and we'll get a piece of information, I think, in the overnight futures trading out here, it doesn't look to me like there's enough volume to push the market much lower throughout the day. But the 30-minute chart here for the Dow futures, Tom, what it formed out here and what it completed was a 1 to about 1.618 A to B equals CD to the downside. And that's what folks are looking at on my screen right now. So it completed it, happened to do one of my favorite patterns, which was making 7 of the Chapman wave counts to the downside. And then we had the cavalry, in essence, show up. We had the bulls, the buyers, formed a nice little bull sash, bullish engulfing candle. So that says that low in the Dow futures from this morning or this afternoon at 12:30 at the 18,378 is a really important low to hold if, in fact, we're going to see a bounce. Now, So I've got a little bit of conflicting patterns. Intraday certainly have what you'd call a buyable pattern inside of the Dow out here right now. So that's what's going on there. As you know, and I think you mentioned that we've got Facebook, you've got Apple.
Yep, monsters.
Yeah, big monsters coming out. And if I take a look at the NDX 100, last week I talked a little bit about the oscillator unchanged line. That is the red line that is on my chart here. Now, what that is doing, it's a way to take the data at the bottom of my screen, which is the price oscillator, which is the difference between two exponential moving averages. In my case, I'm using 19 and 39. And it allows me to understand when the price oscillator is rising or falling, because there's nothing more bullish than the market continuing to rise and the price oscillator rising. And right now, in order for the NDX 100 to give us that first signal, not a leading indicator signal, but a signal that the market is ready to push lower, the NDX 100 has to get down below 4614.91. It hasn't even done anything. Today's really an inside day.
Yep.
So it looks to me like the NDX has taken over. It was weak off of that bounce on June the 27th, but it looks to me like it's taken over. So that's my outlook as we speak right now.
Yeah. And folks, you can come over to our website at TFNN. You can test drive Steve's newsletter, 30 days, absolutely free. Go to newsletters, go to trading newsletters, see Mastering Probability, 30 days, absolutely free. And of course, don't forget, every trading day, 1 to 2 Eastern Standard Time, right here, right on your cell phone. TFNN.com, hit Tiger TV. Thanks, Steve. Have a great one. Have a safe one.
You too. Stay warm, my friend.
Yeah. Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to Apple. So Apple, after the close tomorrow, folks, 4:30, that is going to be the monster out here tomorrow. So Apple right now is trading at $97.06. You're down $1.50. And let's take a look. So this is pretty cool. Okay, so Apple's been in this consolidation for about 6 months, and all it could do since it had gone up in May is get halfway into the gap from the gap down the last time it came out with numbers. The last time it came out with numbers, folks, Apple had closed that day on the 26th of April at $104. It opened the following day at $97. We did a counter trend bounce and we got up to the $101. And now what you have is that we hit a high last Thursday at 101 with 32 million shares, and now we're coming down with 32.5. So the way Apple is set up right now, it looks to me like Apple actually is going to go after this $92.78 to $89.47. Now, those numbers are the high volume swing low that's been laying out there since May 12th. Because what you have out here today, now this is subtle, but this is what you have. You have an expansion of volume in Apple as you're going lower, and in that case, guess what? If we put the NDX 100 up, what you're going to see is that the NDX 100 is pulling back or going sideways with very light volume. So Apple, is going to basically present a problem for the NDX tomorrow. Now, that being said, what ends up happening, so that's Tuesday. Wednesday is going to be a battle extraordinaire, and this is where the hardest take is looking at, okay, what is going to be more powerful? What the Fed says at 2 o'clock or what Facebook does at 4 o'clock? So the Fed comes out Wednesday at 2 o'clock with a statement. I suspect inside the statement that they're going to say they're going to raise rates, in December. Are they going to try to? We'll see if that does anything to the market. Facebook is trading at 121.39. They come out after 4 o'clock. And the way Facebook is trading, it looks to me like Facebook is going to blow away these highs. The highs that we're talking about on Facebook are 121.08. And the way Facebook is trading, man, it looks to me like you can get a gap higher. And, a Facebook, it's hard to tell, what a gap higher would do. Are we talking $10, $20, $5, all of the above? So that's on Wednesday. Now, Thursday, what we have is that after the close, you get Google, and we have Amazon coming out. The way Google is trading, Google's down 398. We're at 738. Google looks to me like it wants to pull back. And this is where, it looks to me like Facebook is probably taking Google's business. Not all of it, of course, because Google's a monster too. But bottom line, they're taking their digital advertising business. They're getting into it, and they're getting into it pretty good. Now, that being said, for the NDX 100, you go back to Amazon, it's like, okay, Amazon's down $7.50 right now, and Amazon's pulling back on light volume. So Amazon also looks like it could go topside. So there's going to be a wild week. And then on top of that, folks, what we have at the end of the week is that we're coming into the end of the month, which is window dressing, okay? So when I started the program off, the NDX 100 as well as the NASDAQ are in those ABC structures on the way up. So the volatility, you can expect it in spades. And the Fed statement is going to be a big statement, specifically because what does happen this time is that they do not have a news conference after the fact. So it's going to be a statement. It's going to be people looking inside the statement as to what's going on. If we go over to Rheingold Resources, what you're going to see, and it's going to be intriguing to see what happens with the rest of these gold stocks right now. And this has to do with the Fed. My take is it has to do with the Fed. So Rheingold's taken out a small swing point of an ABC structure down today, and it's taken it out with volume. And Rheingold is one of the strongest gold equities out there, and it's quite a bit ABC down. The A point is 126.55. The B is 112.66. So you're talking approximately 40. Well, that's 10. Yeah, $14. Your C point is 116, so it's a 102 level. And 102 is going to get you right back to where it broke topside from on the 24th. So in that context, it's pretty cool because what you're going to get, I suspect, is that if you're breaking the B point right now, as it gets back into where this broke topside from, you're going to have lighter volume. Well, that's how it normally works. Is that because if the volume comes out before you get back into the breakout area, the energy is out of the equities when they come back in. The XAU, the HUI, now they're broken the swing points, but it doesn't look to me, now I don't get the volumes in these until after the close. It doesn't look to me like we're actually going to have the volumes breaking the B point, though. The reason I'm saying that is that if we go look at a few of them, you get an Eco Eagle down. It's down good. That's breaking a swing point that had 2.6 million. Well, actually, it might be able to do 600,000 in the next half hour. We'll see. It's broken it on price, that's for sure. You know, we're at 51.26 right now. Gold Corp, different ball game. Something's going on. Gold Corp's going to be a close one because Gold Corp, the lowest breaking is $17.87. And it looks to me like Gold Corp may have the volume. What we will see happen coming into the close is a few of these ETF structures, we're going to come in, and there'll be big volume coming into those closes. We go and we look at the IWM, the small caps will not back off. You're down 30 cents right now. You're down 11 million shares traded. If we do go to the oil market, though, what you're going to see is this. The oil market CLU6. So oil's trading right now. The contract itself is trading down at $1.09. We've done volume of 363,000 contracts. This is making its way down into the swing point from the 18th of April. That swing point is $40.58, and it's going to be really wild as to how it comes into that area. This is the reason. The next lowest swing point, so when you're going, whether it's up or down, folks, they're like staircases. You get through one swing point, likes to go to the next one, likes to go to the next one, until you get a rejection of price with lighter volume. That's down and up, okay? It's just the same deal over and over again. Well, in oil's case, at $40.58, if this contract, which is the September contract, does not hold that, then psychologically we're going to see some action here. The reason being is that your next swing point is below the $40 level. Your next swing point is $38.67. They start flashing under oil under $40, you're going to see some heavy selling pressure inside those large integrated oil companies. Inside the XLF, the financials, what we have with the financials right now, financials still going sideways. They haven't been able to get up and into their high yet. They've been pushing to try to do that. Right now we're 23. That high that we're talking about is $23.93. Some of the higher volume stocks in this low volume market out here today goes like this. Sprint has a big bid underneath it, up $1.31, trading at $5.93. You got Micron Tech up 78 at $13.91. Bank of America is down 2 cents, that is, at $14.35. You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 88. You get the NASDAQ off 7. S&Ps are down 7. If we take a look at percentages, you're going to see the Dow is down 0.4%, the S&P's 0.4, and the NASDAQ 0.1. Okay, so the NASDAQ does have that juice underneath it. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
I'm good, thanks. I'm good. Hey, I'm listening to you talk about Apple and Facebook, and as far as I like putting straddles on right around the earnings on these two.
Okay.
So looking at Apple, I know the downside around 90. I'm a little nervous about the upside. It's having getting over this 100. It's been quite a feat lately. And what do you think about putting the straddle on? It's about $4 to put the in the money straddle. Expires on Friday. Obviously, just looking for the earnings.
Okay, so we get $4. You're at 97. On the downside, you get 92. Okay. So there's 5. The upside, if it's over 100, the bottom would be. It's interesting. It's 110. So the downside looks like it's 92, and the upside in Apple looks like 110. Man, that's kind of interesting.
Really? Okay.
Yeah, I know what it is. See, what you have here, folks, when he does the straddles, folks, he has to make more than $4, right? That's what I got, right?
Right.
Yeah, so
Yep.
It's really close, man, on the downside there. The reason being is that, see the 92.78? That's the high of the high volume low. And the low is 89. If you get 89, you get it made. Do you know what I mean?
Right.
I don't see it, going upside, but how I gauge that is that I took the high of the consolidation it was in, right? And what happens, folks, is that it's been in a consolidation since the last time we come out with numbers. And if it gets away from $100.73, it can go up $10 like in a heartbeat. You know what I mean? So,
Okay. Yeah. Well, maybe it's worth it. If I could break even on the downside, and I see it going down. I don't really see it going up, but who knows with Apple?
No, I'm with you. I'm with you.
And take the chance if it goes on the upside, it's where the money's to be made.
Right. And so the last one, what did you break even or made a little, right?
Yeah, well, I just did Microsoft. I made some money on Microsoft.
Right, that's the one. No, I mean you bought the dollar ones, right? Yeah, you had
and I made a couple of bucks on them.
Okay.
So I put my order in right away. I don't look to get greedy. I put my order in, and it went off right off the gun.
Which is so smart, man. Because I was watching that. Because I remember you calling the night before, so I was watching that. Yeah.
Yeah.
Cool.
No. I called. So maybe I'll take a shot at it.
So
If I think
Facebook, let's look at Facebook. I think Facebook's the monster, man. I think Facebook, but the premium is probably insane, right?
Yeah, it's like $7. That's about $7, maybe a little over $7 to cover it. Which, I mean, the thing that could even go up 15, 20 points.
Yeah, no, I'm with you. But $7 is a monster, man. That's a big one.
The big one.
Different
maybe
ballgame.
I'll take a shot with this one. If I make some money, maybe I'll take a chance.
Yeah, that's a good way of looking at it. Okay, brother.
All right, Tom.
Have a great one, man. Have a safe one. Our phone number is 877-927-6648. And you're going to see some big volatility all over the place this week, folks. I mean, that's the way this thing's shaking out. Now, what hasn't happened yet is that the dollar is still just laying there. I expect what you're going to see is that on Wednesday at 2 o'clock when the statement comes out is that you're going to see big movement in the U.S. dollar. You're going to see it in the bonds. You're going to see it in the metals. You're going to see it in the commodity market in general. And so that 2 o'clock layout is going to be a big deal, and what's going to be pretty wild is that you have that at 2, and then at 4 we have Facebook coming out with numbers. If we take a look at the Qs still look like they want higher price. What I'm trying to figure out in my own head is that I really feel like the Fed is going to basically, say that they're going to go up on rates once again. It's like, okay, you say you're going to go up on rates. I don't think the market's going to take that well. But we'll see. But the divergence is out there, and it's out there in spades right now. Some of the Dow stocks, this is what we have happening inside the Dow Industrials right now. You have Caterpillar's down 60 cents. You get ExxonMobil off 186. Let's go to Exxon. We take a look at Exxon. You get juice coming out of Exxon. So Exxon has made highs out here with 9 million shares. You're back down. Well, it's going to need more volume than this. You're back down with 7 million, but it looks to me like Exxon's going to go after this high volume swing level that was out there on the 27th. That number is the 89.10 area. Chevron, actually, let's look when Exxon comes out with numbers. So Exxon comes out with numbers on the 29th at 8 o'clock in the morning. Chevron, these are the two largest weighting structures inside the XLE. Chevron comes out at 8:30 on the 29th. Chevron is coming down with expanded volume. We did 508 million shares. Yeah, Chevron's got the real juice on the way down. Chevron looks like it's also going to go after the 27th. That swing level there is a 99.52. Now, what's important with the Chevron deal goes like this, folks, is that Chevron has been in a high volume consolidation since April 20th. We're at 103.09. Once you get back inside 102.53, if it comes back inside that, and you need an expansion of volume also, not just coming back inside it, but if you got that, then that'd be some problems for these, for Exxon and for Chevron. It looks to me like hey, we'll find out what it does at the lowest swing point first. That lowest swing point is going to be crucial as to what it does. If we go over and take a look at the GLD, what you're going to see inside the GLD out here today is we're backing down 80 cents. You're doing 11 million shares. And that's just about what we did last time we came down. So it's not that it's breaking the swing. It's not. The swing point we're talking about is 125.31. You're at 125.54. It did get down there. We'll see what kind of volume comes in the next 12 minutes. Now, what does happen inside the ETF structures coming into the close is that you're going to see more volume in the GDX, and the XAU, and the HUI, and the GLD. There's going to be some juice inside that. So particularly in the GDX, what seems to happen, like right now, the GDX only has, so we can check this out so you can see this. Okay, there's 51 million shares right now in the GDX. It's down $1.15. You get 11 minutes. Now, when I start the 4 o'clock hour, we'll get into that GDX, but you're going to see that expand dramatically because it's right at the close that the trustee, the market maker, Van Eck, comes in there with the buy and or the sell in order to keep the net asset value where it should be. And that's what that's all about, meaning that what is the net asset value, where is it at in relationship to where it's been trading all day. So they try to keep that as close as possible. And the way you keep it as close as possible is that they're either coming in buying and or selling, and they're doing that in a very dramatic way because they have to keep it at net asset value. We go take a look at the commodity market in general. This is what you have inside the commodity market out here today. We have crude oil down 2.4%. Gasoline's down 2%. Natural gas is down 1.3%. You have the orange juice is up 3.7%. Live cattle's up 2.7%. Sugar's up 1.5%. We have silver down 0.5%. Gold is down 0.6%. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 87. NASDAQ is off 6. S&Ps are down 6. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and take a look at the CVX. CVS, rather. CVS. Okay. So CVS right now, folks, trading down 256. You get an expansion of volume on the way down. And this is when you really want to pay attention to something like this, because we have an expansion of volume in a market that has light volume today. So CVX is going after the last swing low, which is on the 24th of June. The high of that low is $94.52, and you're already into it. The low is $91.75. this very well could be a very large ABC structure on the way down. The A point on this would be $106, which is the high of May. 106 is your A. 91 is your B, 91.75. So you're talking about $15. Your C point is 98, so you get 78.73. And this, look at that. That $15 on it, 98, 88, 83. And what you have is that this does have a high volume swing low from February 9th. And that's where I expect that this thing's going to go. You want to keep your eye on this because we've been down there a few times. I mean, and this thing got whacked around pretty good. But if you break that area, that is saying this thing can go dramatically lower. Because what had happened is that this went a straight line all the way up from $26. It was trading $26 in 2010. Goes up. It has volume up until 41. But guess what? Over 41 all the way up, there's just nothing here, you know. So we know that you can stay at highs for quite a while, but once you start breaking down, it's trouble in paradise. And what you want to be watching real closely is that if we do get a couple of those breakdowns, that's going to be a big heads up that the market itself would be just ready to turn. The real kicker here is going to be, is the NDX 100 and the NASDAQ going to do that ABC structure on the way up. Now, as you come over to our website at TFNN, folks, what you're going to see right in the front page is that coming this Thursday night, okay, I'm going to be doing a webinar for my subscribers of Market Insights. You can test drive Market Insights right here, right now, 30 days, absolutely free. You come to the webinar Thursday night, 6 to 7 o'clock. And what we're going to be talking about is that, you know, guess what? The earnings are out. What's next? What's next? There's always something next, folks. Bottom line, what we're going to be talking about is how is the dollar going to affect the oil and metal market? Interest rates, how are they going to affect the housing market? Is Brexit actually going to have an effect on our markets? It's going to be really intriguing, that aspect in itself, because it looks to me like they were probably smart, and, you know, bottom line is that life is going to go on. What sectors can you expect to have the most amount of movement, and how to position yourself for these expected movements? So you can check it out on the front page of TFNN. You can commit to that workshop this Thursday night, and of course, coming right up to Thursday night, I expect we're going to have some nice volatility all over the place. The cool thing is that we will get some answers, in particular the answers about what the Fed is saying they want to do for the next few months. The numbers in Apple are going to be out, the numbers in Google are going to be out, the numbers in Facebook are going to be out, and the numbers in Amazon are going to be out. So then what do we have? Well, guess what? You're coming into the end of the month, the beginning of the month, window dressing, and then we're coming into a season that is not too friendly to the marketplace. You know, what does happen is that, you know, many times markets make lows in September and October timeframe. Many times what it actually does is makes that low, and then in October, but it kicks right out of there in October also. So it's really intriguing to see how this whole thing shakes out. My take is that it's going to be all about this good old U.S. dollar. You stay right there, folks. We're going to be coming back with some numbers for you. Dow right now is down 86. The NASDAQ is off 5. S&Ps are down 6. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great week, folks. To master love, you have to practice love. The art of relationship is whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action. It is not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 77, NASDAQ off 2, S&P's down 5, gold contract down $9.10, trading at $1,322 an ounce. Silver down 10 cents at $19.58 an ounce. Platinum flat at $1,083. Copper down a penny and a half at $2.21 a pound. Light sweet crude off $1.14, $43.05 a barrel. Oil is going after this $40 level, folks. We'll see what happens when we get down there, but that's what it's doing. We had an expansion of volume, wide price spread, all of the above. Bonds, 10-year note down 3 ticks, 132 even. 30-year bond down 1 tick, 171.19. Now, both the 10 and the 30 look that they want to go back to where they broke topside from on the 24th. And what I expect that's going to be all about, more than likely, is that we're going to see when the Fed comes out. The Fed starts a 2-day meeting tomorrow. We'll come out with a statement on Wednesday at 2 o'clock. No press conference. The statement's going to be the whole ball of wax. I suspect inside that statement, they're going to be yapping that they want to go up on the rates again in December. I suspect they want to do that, but guess what? I don't think they're going to be able to do it. But the perception is, and their statement, I expect it's going to be in there. That's going to throw some turmoil in this marketplace. King dollar down 216 ticks, trading at 97.30. King dollar wants higher price. King dollar looks like it wants to get up into that 99, maybe 100. Euro is trading at $1.09, and the yen is at 105.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're hanging at these highs. You're at 216.65. Your ABC structure inside the SPY has a price projection of the 218.90. I expect we're going to see it. We're going to make it. That being said, we have an ABC structure also confirmed inside the NDX 100 as well as the NASDAQ composite, and we'll see how that shakes out. The 3 Qs are at 113. I have a hard time figuring out how they're going to get to 121. But guess what? Apple, Amazon, Google, and Facebook are coming out with numbers this week, and that just might do it. The composite, what do we have with the composite? And with the NASDAQ composite, what it did again, it's right at the highs, and it is actually pushing, the NDX 100 had weaker volume. The composite, it's not that it's strong volume, but it did uptick from Friday. So composite's 5,097. The price projection on that is 54.68. Volatility, man, we're going to have this out here in spades. Gold contract. What do we have with gold? What you have with gold is this, folks. Gold contract out here today, and we're going from the August contract to the December contract, and that'll be all this week. So the August contract today is down 850. You've done 251,000 contracts. You're going after this 1312 level, 1310 level. We hit 1311 out here today. What I expect you're going to see is that this contract wants to get into the 1280 area. Right now, we're at 1315.20. If we go take a look at silver, what you have with silver is this. Silver came off the highs last week, had a little juice underneath it, nothing heavy. Silver is building cause. We're at $19.60. It looks to me like silver is building cause to get into this 1804 area. King dollar. And it's going to be about king dollar, folks, okay? So what you have with king dollar is this. King dollar is at 97.29. Your downdraft in February, the beginning of that downdraft was 98.91. what I expect you're going to see, King Dollar's trying to make its way up to that level. And the kicker here inside of King Dollar is that if we pull this up in a continuous contract, we put it back a bit, what you're going to see is that your first swing point is 98.59. If you make 98.59, this thing is going to go for 100. 160 is the next one. This is the same consolidation that the dollar has been trading in since February of 2015. So you're talking about, this is a long consolidation. And bottom line is that the last low that was established was May of this year. That's when we get down to 91.88, rejected it. It's like, okay, you're going to go topside once again. And on a fundamental basis, what can make that thing just jam in a huge way would be the Fed saying once again that they still plan on going up on rates in December. And, you know, when you look at the basis of where we are in the marketplace and where we are with jobs, meaning the jobless rate is down, the market's at all-time highs, it's like, okay, what's going to be their excuse for not saying they're going to go up? I don't see it, you know. So that being said, however, I can see them saying it, and then guess what? As we're coming closer to December, same thing. Markets are going to fall apart. You know, Europe is still in tough shape. Then they just back down once again. The 10-year note. What do we have at the 10-year note? We're trading at 132.01. This is an ABC structure in the way down. This structure here actually, you know, if we break this B point of 131.23, it actually looks like I can go lower than the 130.21 because your A point on this is 134.07. Your B is, let's see, I got a ballpark of 132, so that's only $2 actually. Yeah, No, that's where we'd go. 130. Your price projection would be at the beginning of that, which is the 130.21 area. Oil. What do we have with the oil market? Oil's taking some pressure, folks. What you have with the oil market is this. We went down $1.15 today. You're trading 369,000 contracts, which is some good juice on the way down. It's going after the swing point of $40.58. That was the swing low that was established out here on the 18th of April. You break that swing low, then oil could be in big trouble. Because if you break that swing low, the next lowest swing point is down at the 38.67 level. And of course, 38.67 under $40. That would basically raise some eyebrows. That would bring more selling inside the oil, natural gas sector in general. This is Tom O'Brien. This is TFNN. You stay right there. We'll be coming back with some numbers. We get Khalid come out with numbers. That closed at 88.55. It's trading at 84.66 right now. Sanmina come out with numbers. That closed at 29. That's trading at 26.68. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over to Gilead, GILD Sciences. They closed at $88.55. It had been up $2. Right now it's trading at $85.60, so that's kind of at the beginning of where it was. We take a look at this and we bring this back a bit. What you're going to see is that this has been in a long-term high-end consolidation, but the high that was generated out here was in June of 2015. This is now making its way down into the lower end of this consolidation. And so how we come down into this is going to be crucial, meaning the $73 level. Right now it's only down $3, but this looks to me like it's going to go after the lower end of its consolidation. This is how the numbers went. They made their numbers. The estimate was $3.02. They made $3.08. Let's see, revenue. Okay, so the revenue, the estimate was $685 million. That's where they didn't make it. Well, no, that's not all their revenue. Okay, new product sales. They saw, it's still a little light. They see for year-end product sales, they saw $30 billion to $31 billion. Now they see $29.5 to $30.5 billion. So bottom line is it is a little light. If we go over to the GDX for a second, GDX, we were watching the GDX, and this is important if you're in this metals market, folks. The GDX and the ETFs in general have quite a bit of volume that come in at the end of the day. The GDX in particular has monster volume that comes in the end of the day to get the net asset value going. And what we had out here today is that we're at 83 million shares, and we were at 52.6 million shares at 15.52. So 8 minutes of 4, you were at 52 million shares, and we did 30 million shares in 8 minutes. And I suspect most of those are right at the close. And if I bring this up, what you're going to see, there you go. 19 million shares were done at 27.73. 2.5 million shares were done at 27.73, 1.1. Bottom line, why is that important? Well, it's important in the context of how you're coming into a swing point, whether you're taking it out with volume or not. And what we had with the GDX, it took out this lowest swing point of $27.80. It didn't take it out with volume. That number, we had 130 million. You come in with 83 million. Now, my take is that we're still going to go lower, couldn't hold price. But I wanted to bring that up so that if you are doing ABC structures on the down and or up, it's important to understand how the ETF structures in general are buying and selling shares at the end of the market day in order to get the net asset value correct. And that's what that's all about. And it adds some big juice. So the speculation is a lot harder inside the GDX as to understanding, like, what kind of volume are you going to come in at the end of the day? Are you breaking a swing point with volume and are not breaking a swing with volume? We get over and we take a look at the euro out here. So inside the euro market, what you have is this. The euro out here today did reject a lower price at the $109 level, 109. The swing point from the 24th, and this is the benchmark. The 24th is the swing point. That was 109.13. We got down to the 109.109.52 today. Now, what I expect you're going to see, this is going to keep pushing into this low, and we'll see until we test it. That low, and I suspect what we're going to have is that when the Fed does come out with that statement at 2 o'clock on Wednesday, that's when the action is going to be inside that currency market, and we'll see that come out in spades. Excuse me, folks. Yahoo is laying out here at 38.22, 38.32 rather, and more than likely you heard bottom line is that Verizon is going to be buying the part of Yahoo. They're not buying the Alibaba share part. What they are doing is that Verizon's going to pay cash in a deal that includes Yahoo real estate, but excludes some intellectual property, which will be sold separately. Yahoo will be left with stakes in the Alibaba Group holding. They'll be left with stakes with Yahoo Japan with a combined market value of $40 billion. So they agreed to buy their web assets for $4.83 billion, and of course that is a dynamic change, and it's pretty amazing when you look at the context of Yahoo, AOL that had it all, and as time goes on, bottom line, they didn't stay ahead of the curve, and look what happens. What is going to be intriguing out here this week for all of us is that when you look at the aspect of Facebook's coming out with numbers on Wednesday versus Google. I mean, certainly Google is not, an Amazon. I mean, a Yahoo, that's for sure. What I think you have happening is that Facebook is taking huge amounts of advertising dollars away from Google. What was really wild out here last night, so check this out here, if I can bring this up for you. Nintendo got absolutely smoked. It went limit down in Japan last night. And what it was about is that Nintendo came out with a material fact, and that material fact was that Pokemon is not going to basically have a material impact on their bottom line or their top line. The reason being, and this is where this gets pretty wild, because Google actually has a big part of the Pokemon company, because it's a separate company, as does another company. So Nintendo themselves only own 30% of the company, okay? And what will happen there is that when you're only at a 30% ownership stake, of course, the bottom line is that will the board of directors from that Pokemon company push revenue downstream? Let me see if I can find this for a second. Consumer discretion, let's see. We'll pull this up. I'm trying to find. Okay, I have to do this at the break. What they did, there's a question then why did they do Pokemon? I suspect they licensed this to another company. I suspect they probably didn't realize that, number one, it'd be so big, and you go from there. Bottom line is that it is a separate company that made the deal, and what that deal is, and this is why Google's involved in it, and of course it's Alphabet now, and what it is, it's the Google Maps, it's the Pokemon that is overlaid of the Google Maps, and that's what's making that program evidently so vibrant and so many people want to do it. If you haven't seen it yet, I haven't seen it myself, but you can, it seems like you can pick up people that are doing it pretty quickly. Because if you're walking down the street or walking anywhere, if you thought that people were not looking where they were going before, forget it now, man. They're so intensely involved in this thing. You can they all seem to have the same look on their face. And I know it's new, but we'll see whether that continues. Because it is absolutely amazing how intense they are looking at their phones trying to grab those little Pokemon. Our phone number is 877-927-6648. Some of the higher volume stocks in this market out here today. Sprint caught a big bid. Sprint was up $1.28, trading at $5.90. You had Micron-Tech up 79 cents at $13.92. Microsoft was up 16 at $57.73. You stay right there, folks. We're coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to LVS, Las Vegas Sands. Las Vegas Sands closed at $47.80. It's trading at $46.25 right now. Let's see what they have to say. Of course, this is a large gambling conglomerate. They came in with net revenue of $2.65 billion. Earnings per share was 52 cents. Let's see. So the estimate was 56 cents. They came in at 52. Bottom line. Net revenue, the estimate was 2.75. They came in at 2.65. And if we take a look at this, so you're down $1, which is not a huge deal. But what you do have is that many of these equities, this is what they're doing, folks. Like Las Vegas Sands, it made it into its gap down from the last time it came out with earnings. Last time it came out with earnings on the 20th of April, it had closed at $52. Following day, it gets down to 46. Gets to a low from 46, goes down to 41. Crawls all the way back topside, and then rejects price and volume. It did that out there today, so now it's going to back off. The question is, on this back off, because the back off's not that bad, it's going to be, how does it operate at the $46 to $47 level? That's going to be a big deal. Texas Instruments, TXN. Texas Instruments closed. Texas Instruments closed at $66.22. This is trading up to $69. You're up $3 right now. Let's see what that looks like. Oh, and look at this. This is at highs anyway. Oh, this is a beauty too. So check this out, man. Okay, this intraday was doing an ABC up. So the A point on this is $60.46. That's July 6th. The B is 65.60, so you get $5. 69.74, man. That's where it wants to go, but I guess it's going to do it in one day. Yeah, you're at 68.90 right now. So let's take a look and see what they have to say. So their estimate earnings was 72 cents. They made 76. They see third quarter revenue of $3.34 billion to $3.62 billion. Okay, so here we go. Texas Instruments reported second quarter revenue of $3.27 billion, net income $779 million. Big numbers, man. Pretty amazing. Revenue and earnings per share for the quarter were solidly in the upper half of our expected range compared with a year ago. Demand for our products, this is a statement from the company. Demand for our products continued to be strong in the automotive market and grew in the industrial and communications equipment markets. Despite sequential growth, demand in the personal electronics market was down from a year ago. In our core business, embedded processing revenue grew 9% and analog revenue was about even the same quarter. Gross margin of 61.2% reflected the quality of our products portfolio as well as the efficiency of our manufacturing strategy. Our cash flow from operations of $4.5 billion for the trailing 12 months, again, underscored the strength of our business model. Free cash flow from the trailing 12 months was up 7% from a year ago to $3.9 billion. That's amazing. So free cash flow, folks, is $3.9 billion. That is huge. They've returned $4.1 billion to shareholders in the last 12 months. Our strategy returns shareholders 100% of the free cash flow plus proceeds. Bottom line, that wants higher price. CELG, let's go take a look at Celgene. Celgene closed at $107.93. That's trading at $105.50 right now. Let's see what this is looking like. So this has been in a consolidation, as has Gilead Science, and that consolidation looks like it's going to press on the way down. Now, what we're going to have is that these biotechs, I suspect, when the NDX does its deal, meaning finishes up more than likely this ABC structure on the way up, or tries to, the IBB is, I suspect, what's going to put some pressure on the downside inside of, there she is. Inside this IBB. So it doesn't even look to me that, yeah, it isn't, as I'm Mr. Dave White saying. This is down. Now, something's going to come out here because, okay, let's see what she says. There's really not even news on Celgene. Well, there's going to be news somewhere on Celgene because what you do have here is that we closed at $107.93. It's trading at $105.80. More than likely, it's going to be one of their tests that bottom line didn't come in as well as they thought it might. WYNN, if we go take a look at Wynn Resort, Wynn Resort closed at $97.41. That's trading at $96.78, and I suspect what that's all about of how Las Vegas Sands come in, because Las Vegas Sands and Wynn are two of the largest casinos also in China. Wynn is going to be coming out with the numbers tomorrow. Let's see, Wednesday. Wednesday evening. Wynn Resorts will be coming out with their numbers. Wynn right now is trading at $97.41. And if we take a look at this, wow, this is an equity that got killed. So this has been a straight down move from $247. This was $247 in March of 2014. Wow. This stock's in trouble. I guess we're going to stop gambling. Either that or other folks in Macau, China are not going to be gambling as much as they have been. Because what you have is this. This is it's like a dead cat bounce up to 105. But yet we still have a high volume low laying out here between 77 and 50. You know, that's how this baby looks like it wants to get into. So that no doubt is one big number, because that is problematic. If we go over to the IBB and we take a look at where the IBB is trading right now, you're right at the highs. You know, we're at the 282. Well, when I say the highs are consolidation that's in. 289 is the top of that consolidation. I wouldn't be selling it just yet, because what we're going to see out here, and this is where the dynamic's going to come in the rest of this week, is that the Fed will start the meeting tomorrow. We're going to have plenty of, you know, rumored news out. Is that, okay, is the Fed going to say that, hey, guess what, we want to go up on rates once again by December? The statement comes out Wednesday at 2 o'clock. Wednesday at 4 o'clock, 4:30, Apple comes out with its numbers. Thursday at 4 o'clock, tomorrow's Tuesday. Tuesday, Apple comes out at 4:30. Wednesday at 2 o'clock, the Fed statement comes out. At 4 o'clock, Facebook comes out. Then on Thursday at 4 o'clock, Google comes out with numbers, and at 4:01, Amazon. The wild thing about the Facebook-Amazon deal is that it's really unusual. This is the first time I've actually seen Amazon come out and say, okay, we're coming out at 4:01. And that's exactly, if you're watching my screen right now, that's exactly what it says. So high volatility, yeah, it's going to be in spades coming across all these plateaus. TXN, Texas Instruments, that's going to put some juice into the Qs tomorrow, even though you get basically a Dow stock out here. Bottom line, just the tech sector in itself, meaning chips, that's going to put some juice into it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow finished down 77. NASDAQ off 2.5. S&P's down 5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now finished down 77. You had the NASDAQ off 2.5. S&Ps are off 5. And this is a wild story, folks. So check this out. We've had Mike from Toronto calling a few different times about looking to how you could short the Vancouver real estate market. So listen to this. This is amazing. Vancouver wheels foreign property tax after a $1 billion inflow. Overseas investors buying homes in Vancouver, one of the North America's hottest housing markets, are going to face an additional, check this out, 15% tax after more than $760 million in foreign money came into the city in 5 weeks. 5 weeks. 5 weeks. Okay, this is crazy. The additional property transfer tax is going to apply to foreign nationals and overseas companies registering the purchase of residential property in Metro Vancouver starting next week. Guess what? August 2nd. This is pretty amazing. The province of British Columbia said Monday in a statement as it moved to cool a market that shot beyond the reach of many buyers. While investment from outside Canada is only one factor driving price increases, it represents an additional source of pressure. British Columbia Finance Minister Michael De Jong said in a statement, this additional tax on foreign purchase will help manage foreign demand while new homes are built to meet local needs. Foreign nationals invested $1 billion in British Columbia property from June 10th to July 14th, according to data the government being collected this summer. More than 86% of that was in Vancouver and the surrounding area. Public pressure for a crackdown has been mounting in Vancouver, where the price of a detached home rose 38% in June from a year ago to 1.6 million Canadian. Now listen to this next quote. This is pretty cool. Right now, the market is so hot, I don't think we'll have an impact of prices, said Brian Yeo, senior economist at Central One Credit Union, said by phone from Vancouver. The dominating factor remains that we still have low interest rates, and Metro Vancouver has a high employment rate, so there's still demand. We also need to see more supply to turn prices. Now, that statement there, folks, okay, when I said, you know, looking at this, that to me, a statement like that from a credit union is saying how crazy the bubble is. Because let me tell you something, a 15% tax on top of a price is absolutely huge. So just so you can wrap your head around this for a second, the additional tax on a $2 million home is going to amount to 300,000 Canadian. Does it make a difference? Yeah, it's going to make a tremendous difference. There's no doubt about it. So we'll see where that whole thing shakes out, but that is pretty intense. And, of course, what that does have to do with, many of that has to do with the amount of money that's coming out of China, and it's been going into San Francisco for a long period of time. It's going to go into Vancouver for a long period of time. Big numbers, man. Just pretty amazing, actually. Our phone number is 877-927-6648. Let's go take a look at Sprint. So Sprint this morning, bottom line, you know, not only had some juice, but had some big juice out here. Sprint, the estimate was $2.34 billion. They came in with $2.46 billion. So revenue was a big jump up. And, of course, what Sprint hasn't been able to do for a long period of time is actually grow. Bottom line, they're growing now. Their operating income, the estimate was $7.99 billion. And this is the net, and they came in with $8.01 billion. This is the first quarter net operating revenue. So they're doing some numbers out here now. If we go take a look at, it went up $1.28. We take a look at Sprint. We put this on a monthly basis. Let's see. Well, it's taken out the bottom of the consolidation. You're at 5. Hey, this thing is. It launched 529, which gets you 218, 529, $3. 529, that's 829. Yeah, this thing is going to, your next swing point, your highest swing point is 715, and it looks to me that it's going to make that run for it. It's about time that they really start printing some money. Because what has happened is this. What has also happened, folks, you get an expansion of volume of revenue. What also has happened is this inside the advertising business. This is a big number. In the month of June, the percentage of advertising on computers versus smartphones has taken over. They have a larger percentage now than computers actually do. That's a big number. That is absolutely a huge number, which will help these phone companies. There's no doubt about it, because the bottom line is that they're delivering quite a bit of content, and I suspect they're going to learn how to do it even better. If we go over to Verizon, Verizon has it down pretty pat. Once they bought AOL, they got the expertise in the advertising exchange mechanisms. And if we do take a look at Verizon, we put this back on a 20-year basis, what you're going to see is that you're trading at 55.87, and it looks like that it actually is going to be going up. Yeah. So the high of 2009, 1999. Wow, 1999, man. That's 17 years ago. So 1999, the low of the high of October was $55.46. The high is 62.62, and it looks like, guess what? It looks like this very well could go for that high. Let me bring this back a little bit further. That is the high. It's been a long time coming, but it looks like it wants to go up and test that high. Close that. Yeah, it's pushing with volume. So this is a big number, because what you do have inside these phone companies is that you're getting the value of the stock is going up, and this is a 4% yielder. So it's a big number. There'll be more folks that will get into that. Marbell's paying 4.4%. That's trading at 42.74. Let me see if this is at highs too. This would be pretty wild. Well, this has a lot longer to go. This hasn't reached well, no, it just reached the high of 2007, but the high of Marbell is at 59, so that has a lot longer to go than Verizon. Verizon looks like they're the ones that basically are putting it together. They have the lines, they have the infrastructure built, and what they also have is now they're pushing this advertising deal, and they're pushing it in a big way. So it's going to be intriguing to see how they incorporate the Yahoo deal into this. Our phone number is 877-927-6648. We get over and we take a look at J.P. Morgan Chase. Now, J.P. Morgan came out with numbers last week. Numbers weren't bad. It got caught a bid up from the price point of 62 to 63.87. That being said, guess what? These babies just are not moving much. You still have an equity that wants to go sideways to slightly lower. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 77. NASDAQ was off 2.5. S&Ps are down 4. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, as you come over to TFNN, you're going to see right on the front page, I'm going to be doing a workshop for my subscribers of Market Insights. It's this Thursday night, 6 to 7 Eastern Standard Time. What it's all about. The earnings are out now. What's the next trade? Because what we're going to have out here, of course, is that you get the Fed coming out. You get you have Google, you have Facebook, you have Amazon and Apple. They're all going to be coming out. If you'd like to come to this workshop, you can test drive my daily newsletter, Market Insights. 30 days absolutely free. You're going to get a copy of my book, The Art of Timing the Trade. You're going to get in the Tiger's Den. You're going to get all of the above. You have the next few days to sign up for it. Great workshop, great education. Check it out. Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. I'm the guy that worked for Verizon that called you and corrected you about the We're Marbell, and they're not really. AT&T isn't Marbell, and we talked about your mother working for. But anyways, I'm not calling to correct you. I'm calling to give you a compliment, because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom. And you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s. And I just want to let you know you're on your game right now, brother.
Well,
you are hitting it on all cylinders right now.
I appreciate the feedback, man. And hey, listen, so hey, you know, in Verizon, man, that you got some real juice underneath you, man. That's pretty intense.
Oh, that's what I wanted to say. That was the first compliment I want to give you. I called you months ago when we had that conversation.
I know.
And it was in the this is for your listeners. And it was in the 40s at the time, maybe 46. And I said, Tom, I'm calling, and you said it was going to 60. And here we are, buddy. I don't care if it gets to 60. It's here, as far as I'm concerned. You did it.
Yeah, well, you guys did it. The thing that's really cool, no, seriously, the thing that's really cool here is that, you know, when you think about the aspect of, I think this move that they just did with Google, with Yahoo's a big deal, man. See, what happens, folks, is that Yahoo couldn't figure out how to monetize it, right? That list alone, that list alone is huge, man. And, Yahoo Finance is something that used to be huge. I don't think it's as big anymore, but guess what? All those people aren't gone, man. So I get a feeling you're going to see some action out of here. And what has happened is that when you guys took over AOL, Armstrong, technology-wise, he knows the ad exchange program in a huge way. And these ad exchanges, folks, are huge. We don't use them because what happens when you use them, you need thousands and thousands and thousands of hits to get anything. So, but that's the way that everything is going, man. Those ad exchanges, are going to put basically advertising businesses out of business. You know what I mean? Well, listen, man, I appreciate the feedback. You have a great one, a safe one.
All right, pal. Like I said, you're on your game right now, buddy. Keep it up.
Thank you, man. Appreciate it. And that's when you got to even be more careful, folks. That's the fact. There's no doubt about that. And hey, we'll see where this thing shakes out. What we are going to have this week, and this is what is this really wild, man. It's like when I look at this market this week, when I'm looking at, I suspect, we have this ABC structure up on the Qs and the NASDAQ composite. That being said, it's like, to me, it's going to be what the Fed says at 2 o'clock on Wednesday that is going to basically have more force than just about anything. So Apple tomorrow night, maybe Apple can do it. Apple looks to me like it wants to go to lower price, though. We had a slight expansion of volume on the way down out here today. You did 40 million. It's like, hey, Apple looks like it wants to trade into 92. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here, 8 o'clock tomorrow morning. Go get them, folks.